and welcome to Cannabis Quick Hits, your single stop for everything you need to know in the cannabis industry, sponsored by Green Spoon Martyr. I'm Nick Richards, a partner at Green Spoon Martyr and a tax attorney, and today I'm really excited about the session today. I've got Christopher Steffen with me, a good friend and a long-standing professional in the cannabis space. Christopher is a broker and an appraiser for cannabis companies, and his company, Cannabis Capital Advisors, is really the go-to place if you want to get your business sold. Cannabis Capital Advisors provides brokerage and valuation services for cannabis businesses, licenses, and real estate as well. They also help raise debt and equity for cannabis companies. Gosh, Chris, you guys have been around for over a decade, and couple $100 million in transactions. And I'm sure that you're well over 160 transactions total. I would guess a little bit more than that now as well. You guys got started in Colorado, and now you've expanded across the country, Chris, just like all of us, right? Now you're in most states where cannabis is around. And it's really a pleasure to have you with us today, Chris. I'm sorry that your partner, Aaron, couldn't join us, but I know he's here in spirit.
Well, that way we can take jokes about him at his expense.
There you go. Let's get some gut punches in, right?
Everyone likes to make fun of Aaron.
Chris, thanks so much for joining us today. I'm really excited about that. I'm really excited to hear about some of the deals that are out there in the space. I'd like to kind of start with some specific states, if that's okay with you. And I kind of like to know a little bit about hey, what's the state of the industry? What's the health of the market? And you know, I might be a little biased. I think we should start with Colorado, where it kind of all started, right? You know, I've heard bad news about Colorado, Chris. Are we still killing it, or is it tough here? Or what's going on?
Yeah, I'd say, times are still pretty tough. In terms of M&A activity, our business has come back a little, though, there are definitely depressed capital flows into the market currently, with the MSOs down and the price of wholesale down, and the traffic in stores are still a little down. So there's some signs of strength in Colorado, but the overall mood is cautious optimism after kind of a long winter.
We thought that there was kind of a glut of businesses in Colorado. It's not a limited license state, and a lot of people thought that there were too many licenses out there and that was driving the price down. Are those licenses going away now? Are we kind of getting through those problems a little bit?
Yeah, no, that's a great question. Yeah, I don't think there's any doubt that we had too many licenses in Colorado. At the peak, it was about 1,270 in Colorado. Now we're I believe the cultivations are down quite a bit from that high. 200-300 licenses. Those numbers, the raw data from the state, are really always sometimes hard to get a real what is open, what is operating, who's selling on the market. The difference between the raw number coming from the state and the actual people in the market, that's always a big number. For dispensaries, we feel pretty strongly 653 stores. Generally, those are, for the most part, open or going to get open in Colorado. That number is probably a little too much, especially in markets like Denver, Trinidad, Colorado, even smaller markets like Gunnison, Colorado, which don't have caps, Aspen, Colorado. A lot of stores in those markets and parts of Denver that, there's oversaturation, and unfortunately, some of those businesses will probably shutter and probably need to, and will help the equilibrium and the greater health of the market.
Is Grand Junction an exception to that? I know that's coming up. Are we going to see more limited licenses there?
Yeah, that's a great question, and that's something that I'm watching to have impacts on those smaller markets on the western side of our state. Grand Junction just opened their first store. There are about 9 stores, licenses issued and awarded to come behind that. We suspect, maybe 1 or 2 of those don't get open or trade at some point, which they're not really permitted to do. But if they don't get open, the city will eventually have to move on to the next guy. But I am watching to see, there's a lot of border towns. The border has never really been the border. The border would be like Fruita, which is a band. And so then your Grand Junction, that'll now be the Western Colorado border. But before that, a long time ago, it was Rifle, and then it was Parachute, and then it was Debec. Then it was kind of Western Debec. Then it's now, right now, it's Palisades. Um, and so you see a lot of companies really benefiting from being on the border, but the border continues to move. So I do see 10 new stores in Grand Junction will disrupt Grand County and probably Mesa County. Where now they're looking to bring rec as well. So yeah, definitely something to watch with Grand Junction coming on. It will be a limited license market, but man, that's kind of a lot of a lot of licenses to add when the market's kind of in its current fragile state.
Yeah. What it seems to me, boy, as we make that march west, was kind of what I thought as you just described it, from to back to Parachute and all the others. Boy, that if I'm in that first state and now we're four counties over, I just lost a lot of value in my business, didn't I?
Yes, I've recently looked at some financials of some businesses out that way that, used to do $400,000 a month and are probably, down to, closer to $100,000 a month. You're definitely wondering how some of the businesses in Debec and Parachute, Silt are going to fare. Some of those little towns have some growth prospects, but still, I don't think it's enough to support as many stores as we've had out there.
Yeah, and it's an expensive business to operate too, so you need that support. Chris, what about you mentioned gross, and that's always been a measure in the cannabis space for value. Gosh, Chris, what in 2014 and 15, people were selling licenses for what, $1 million for just a
Yeah,
bare
$1 million for a
license?
piece of paper. It was very, very common here in Denver, especially.
Not anymore, right?
Yeah, the cultivations that we're working on now are definitely trading, and that is very limited. We used to probably do 2 to 4 grows a quarter, 5 to 15 grow sales a year. This year we'll do 1 or 2.
Mhm.
And a lot of those will be takeovers of the liabilities, and leases and maybe the utility bills that the owners are just kind of cooked. A lot of grows are out there hanging on, producing at a, somewhat of a break even to get to the market price. So it's very challenging. Luckily, there's guys like you out there helping them save money and get the ERT tax credits, as well as your other 471 strategies that you guys have been employing. So we're definitely seeing some relief in the industry in that form. I would say that we have probably hit a bottom in the wholesale market. The prices have nudged up quite a bit. Demand is spotty. We're in a very slow seasonal phase as well, so demand um, is really week to week. We have seen the higher end flower product, trading above 1,000 a pound. You have groups like Green Dot and 710 that are trading almost as outliers, well above that prepackaged and sold around. But high end flower is breaking 1,000. Demand is week to week. I'd say bulk flower more in the $600-700 range. Um, and we'll see kind of where the outdoor comes in, $300-400 a pound. That seems like not as much outdoor wholesale product on the market. And we have seen a lot of outdoor cultivations close down and not plant this year.
Yeah.
Probably a 40% reduction in the amount of plants in the ground since the high point in 2021. I believe we had the most plants in the ground.
And Chris, for a successful company, let's say I'm vertical. Let's say I'm got a small grow and a dispensary. Is one times gross kind of still the kind of measuring tool?
Yeah,
Uh,
yeah. That would be, I would call it a historical rule of thumb. And it has been a pretty consistent guide to a revenue valuation in Colorado, which has generally been the preferred metric. Given the current market conditions, I would probably discount that to a 0.8, 0.85 times of annual revenue. Anywhere from 3 times net income to 5 times net income I'm seeing. If there's some growth prospects or some real growth, which is not a story we're hearing all that much, you might be able to achieve different multiples and metrics.
Yeah. Yeah. So if you're a really good business, you might get a little more than one times gross, but most people are just a little under. And if you're really bad, you're looking at 60-40% of gross.
Yeah,
I
I
would.
would say, yeah, probably 60. There's a point, a lot of the deals that we're working on right now have, they're unstabilized. We recently finished the sale of the Buddy Boy the Buddy Boy retail assets. Those are closing, some today and some last week. A couple different buyers. It was a tough sale. It was on the market for quite a while. The businesses were closed down, so the revenue streams were gone. And so it was a real question of evaluation if we weren't going to base it on an income stream or a revenue. And the market really told us where that was. And that is a symptomatic, I would say 40% of the sales we're working on are unstabilized stores. They may or may not be open with revenue, and they're probably not break even. There's probably some hair on them some way or the other, some post-closing liabilities that we're dealing with.
Folks, I just want to say this. You can see how tricky these can be, right? And you really need somebody who understands what they're doing. Chris is that guy. He's been doing this for a long time. He knows the in and outs here. He knows what your business is worth, and he can save you a lot of time and pain in getting to the finish line by knowing what that finish line looks like right away. So it's a big deal. Chris, I want to talk about maybe some states that are a little bit on a little bit better footing than Colorado. What can you tell me about Illinois? What are we looking like there? I think
Yeah,
Illinois
no,
is a limited
Illinois has
license,
been,
right?
it's definitely one of the most interesting markets in the country right now, has recently gone rec. The first round of retail licenses are up or being built out, a large amount of those being in Chicago area, as well as a lot of social equity component there in Illinois. Only two, I was just there for the Benzinga conference, only two of the craft grows, which was the previous round of licenses, were actually up and operating. I think one or two were very close behind that. That was nearly 100 licenses. And so, a lot of difficulty getting those cultivations stood up in Illinois right now. But we
But
are seeing a lot of transfers of licenses there. My company has been very active. We've completed 4 sales on the state of Illinois from both the craft grow licenses as well as dispensary licenses. Haven't really had any operating businesses that we've represented there. We have one that we will be bringing to market probably first quarter next year, that'd be operating businesses in Illinois. Illinois is a good, strong market. I was talking to an MSO the other day, and they have a store on the outskirts of Chicago in the suburbs near Wisconsin. And in that single store, they produce more than their 12 stores annually in revenue than their 12 stores in Florida. So their one store on the border in the suburbs do better than their 12 stores in Florida. And I thought that was a pretty interesting statistic.
particularly Florida, which is you get some pretty big revenues there
It's a
too,
good
right?
market, but I
Yeah.
believe they're also up to 600 some odd dispensaries. They have like 980,000 registered patients now on the medical side. So their, percentage of patients per dispensary is pretty in line right now. I think when you see rec, you will see that increase. I doubt it's a double like you see in most states, just because the medical has been around, the program's been around in Florida for quite a while. But that is generally a number that we expect and sometimes exceed. Missouri has more than doubled as it's gone rec. If you want to jump one more state, that is a very interesting state right now, especially for smaller operators. There's not as much MSO activity in Missouri, so can be a little more, I guess, egalitarian market where you might not be getting shut out of vertically integrated MSO stores like you might in Pennsylvania. I think it'll have a little healthier wholesale market and product market. Again, I've seen a lot of licenses transfer there. One major acquirer has acquired a significant number of licenses in that market. We worked on some sales in that market as well, both paper licenses for cultivation, dispensary and manufacturing, as well as integrated and operating businesses. Missouri's definitely a state to watch, and the numbers have generally, gosh, it's been probably a 3x across the board in the revenue and traffic you've seen in the Missouri stores from medical direct.
So three times growth. Does that take a little while for that to get there? Or is that pretty instantaneous once you go rec?
It's been incredibly quick just because the state was I thought it was a good program. I thought they wrote a good law and they got the right number of dispensaries where it's not oversaturated. There's still a lot of competition, but not so monopolistic. So they had good groups, good investment, good store locations built out. The kind of store locations that generally we couldn't get in Colorado just because of leases and sin clauses say that a Safeway or grocery anchored shopping center would say, hey, you can't have any liquor stores, cannabis dispensaries, tattoo, adult bookstores in this shopping center.
Chris, all
The
the fun
loan
stuff,
covenant, what's that?
all the fun stuff.
Yeah, all the good stuff, the den of iniquity. Uh, yeah, so I think they were able to buy good real estate and buy standalone businesses and locate on pad sites in big commercial areas with signalized corners and parking, and good marketing. So the market has responded really well there. It's good to see them having some success because before it went wreck, they were holding on tight and people had invested a lot of money and weren't seeing a lot of return on it.
Chris, I want to. I know you guys are in Maryland as well. Another state that's just recently gone rec. Is that the kind of turnkey that starts to make the M&A, really kind of start to go? Is that a factor?
I think contextually we're looking for any good news we can get. So Maryland, right now we're watching closely this Ohio election. We're feeling really good about turning Ohio rec. That could be a material impact. New York coming online more continuously. God, there's no good stories coming out of New York, unfortunately.
Yeah.
But the real catalysts, as you know, are gonna be involved with 280E, with rescheduling. Um, Safer banking is now in question with the new Speaker of House. The integration of safe banking and rescheduling would lead to more lending, more capital in the market available from lending institutions as well as private capital. We would think after a few months it would allow for custodianship of institutional shareholders to hold plant touching companies. And these are the real material catalysts that bring back the cannabis market, capital flows into it, the increase in the prices and valuation of private and public companies that would waterfall from that capital coming in.
And we were a lot more excited about that a few months ago, weren't we? Before
I was
the
real
war in
excited about it.
Israel and
Gosh, what was it, 2016, when we first passed public company ownership, and there was $3 billion of Canadian equity scouring the United States for good companies to buy. I saw the other day that John Hickenlooper was touting his governorship as the leader of cannabis legalization, but I think he must have forgotten he vetoed that bill along with the social use bill, along with the hospitality bill, and the allowance for medical patients in schools with autism to use medical cannabis. He must have forgotten about that one.
Chris, you mentioned capital, and that's been a real tough part lately. You also mentioned the Benzinga conference, which is the capital conference.
Yeah.
I wasn't there this year. I was in Florida a little earlier, and it seemed to me all the money guys were there saying they had money, but they weren't going to give anybody any of it. Is that still where we are?
Yeah, I think it'd be really hard to raise money in this environment. I think it's been especially hard for startups in new states like New Jersey, with unclear where the number of licenses are going to shake out. So in turn, where the amount of product and supply would shake out. Um, Yeah, I think it's safe to say it's been really difficult. You've seen some interesting positions taken recently. You saw British Tobacco took a $120 million position in Organogram. So that was a huge move. But at the same time, you saw Constellation let several hundred million in warrants expire in Canopy Growth, which seems to be, in a death spiral. So, without those changes, without several quarters of good earnings reports and some stability in the metrics. Those are the kind of trends that we're going to be watching to see, when this wave kind of comes back. But right now, they're very scattered. The capital is coming from very few directions.
Chris, I assume that Buddy Boy deal, although you said it wasn't operating, so it was a little bit different of a deal. But the buyer went there, so I assume they saw the opportunity, and they realized the value was there, and so they closed the deal. Are there other places where buyers might see the similar kind of opportunities out there right now? If
Yeah,
I'm sitting
yeah.
on
When
10
we
million, where should I be looking?
That's right. In Colorado, I think it's probably below 1 million for retail locations that are good corners that may have been established in the past. That you can breathe into and take them up to $2 or $3 million a year annual stores. Yeah, right now that's only 250, $300,000 in after tax earnings. But with 280 going away, is that 500,000 in earnings? And do the multiples go up? Do the cap rates and discount rates go up? Do the lending rates go down? Um, all of these things could create a lot of value. Say I bought a store for $600,000 and I have them for sale if you need them. And I got it up to a $2.5 million run rate, and we sold it on a 2x multiple. That's a $5 million store, and I could potentially be making $500,000 a year in cash flow out of it for the years, and that would be an excellent investment dynamic. I think if you could achieve it, and all of those things are, these aren't hitting home run plays. Getting a store from less than 1 million back up over 2 million, should be doable. Seeing a multiple increase from 0.8x to 1.8x, these are achievable with material catalysts in the industry and just over time appreciation.
Chris, what's the number one mistake you see out there for people wanting to sell their business?
Thinking they know better, thinking that what they want. People have bias. You're biasing your own self-interest, as of course you should be, right? You're looking out for yourself. But it's hard to take something that you built by hand and that you love and has your blood, sweat, and tears, and think of it objectively and answer to the market.
Chris, that's
And
my
a lot,
baby.
yeah, it's right. And a lot of times they're saying, no, I can't take a penny less than this, and I don't do this, and I got to pay so and so, and I told this guy give him 100 grand. And really, the market doesn't care what you want, unfortunately, And so, listening to a broker or listening to someone who is in tune with what the market's doing is going to save you a lot of time and energy rather than trying to force your will onto the world and your will onto the market. You need to shape your will onto the shape of the market. And if you're a seller, you sometimes you have to be a seller. You don't always get what you want. Um, and same with buyers. I feel that I generally have we're win-win people. We're never looking to exploit anyone. We're always trying to get everyone happy, or we can't get to the closing table. And if everybody's just a little bit uncomfortable in a transaction, I feel like you've probably done a pretty good job. If the buyer wanted a little lower price and the seller wanted a little bit higher price, but they got the timing they want, and the buyer came with all cash, or got some carry terms. Those are the kind of situations I think work well.
Chris, really, really appreciate your insight and knowledge in this area. We're gonna put your information up for everybody to get in there. Chris, I'd be willing to bet you're going to be in Las Vegas later this month for MJ Biz.
Yes, sir. Gosh, 3 days. I'm training up for it currently.
Yeah, me too. Me too. I'll be there as well, Chris. And hey, out there, if anybody wants to meet with Chris or myself, just reach out to us. we're available. Our emails and phone numbers are coming up on a slide, and we'd love to meet with you and help protect you in this industry moving forward and get you to the finish line you're looking for. Chris, thank you so much for your insight. I'm looking forward to seeing you in Las Vegas.
Yeah, thanks for having me, Nick. Yeah, I'm looking forward to seeing you up in the mountains soon.
There you go. See you up there, my friend.
All right, later, brother.
Thank you.